The U.S. government's ongoing shutdown has resulted in the postponement of September's official jobs report, a key economic indicator that provides insights into labor market conditions. This delay hampers the Federal Reserve's ability to assess the current economic landscape comprehensively. In its absence, the private sector report from ADP indicates a contraction in private payrolls, with a reduction of 32,000 jobs last month. This data point, while significant, does not fully replace the broader scope of the government's employment report, which includes public sector employment and other vital metrics. Callie Cox, chief market strategist at Ritholtz Wealth Management, highlights the challenges faced by the Federal Reserve in making informed decisions on monetary policy without complete economic data. The absence of the jobs report could lead to increased uncertainty in financial markets, as investors and policymakers lack critical information needed to gauge economic health. This development may affect market sentiment and could influence future Fed decisions regarding interest rates and other monetary policy tools. As the shutdown continues, the delay in data releases could complicate economic forecasting and strategic planning for businesses and investors alike.
The cryptocurrency market witnessed significant developments recently, marked by regulatory clarity, notable corporate acquisitions, and security challenges. The U.S. Securities and Exchange Commission, SEC, provided much-needed clarity on crypto custody, permitting state-regulated trust companies to act as qualified custodians for digital assets. This move is seen as a pivotal step for institutional investors, as it lowers barriers for registered investment advisors to manage cryptocurrencies like Bitcoin and Ethereum, fostering wider institutional adoption. Meanwhile, Ethereum recorded its best third quarter since 2016, with a 66.55% gain driven by robust DeFi activity, stablecoin issuance, and Layer 2 scaling solutions, positioning it strongly within the decentralized finance ecosystem. In corporate news, Tokyo-listed Metaplanet made headlines by acquiring over 5,200 BTC, valued at $615 million, thus becoming the fourth largest corporate Bitcoin holder globally. This strategic acquisition underscores Asia's burgeoning influence in the crypto treasury space. The firm's aggressive expansion plans, backed by a $1.4 billion fundraising initiative, aim to capture 1% of the global BTC supply by 2027. On the security front, the BNB chain's social media account was compromised, with hackers posting phishing links, highlighting ongoing cybersecurity vulnerabilities in the crypto sector. Additionally, a landmark legal case unfolded in the UK, where Jamin Qian pleaded guilty to laundering over 61,000 BTC linked to a massive Chinese pyramid scheme, spotlighting the challenges of regulating illicit crypto activities.
SWP Financial LLC has significantly reduced its position in the iShares Convertible Bond ETF, BATS, ICVT, by 46% during the second quarter, as per its latest SEC disclosure. The firm now holds 10,304 shares, valued at approximately $928,000, after selling 8,789 shares. The iShares Convertible Bond ETF, which invests primarily in USD-denominated convertible bonds, has experienced a notable increase in its stock price, opening at $100.10 recently, reflecting a 17.6% rise. This ETF had a 52-week low of $75.97 and a high of $93.29, indicating a strong upward trajectory in recent months. The activity around ICVT, including SWP Financial's divestment and other institutional investors' acquisitions, suggests a mixed sentiment within the market regarding convertible bonds. Convertible bonds are hybrid securities that offer fixed income with the option to convert into equity, providing a balance between risk and return. The ETF's performance and investor movements could indicate confidence in the current market conditions for convertible bonds, potentially driven by expectations of favorable interest rate environments or equity market performance. This strategic adjustment by SWP Financial and other firms may impact market sentiment and influence other investors' strategies concerning convertible bond investments.
SWP Financial LLC has marginally increased its stake in the iShares U.S. Treasury Bond ETF, BATS, GOVT, by 0.6% during the second quarter, As reported by holdingschannel.com, this adjustment brings SWP Financial's total holdings to 83,865 shares, valued at approximately $1.93 million, representing 1.1% of their investment portfolio. The iShares U.S. Treasury Bond ETF, managed by BlackRock, tracks a market-weighted index of fixed-rate non-convertible U.S. Treasury securities with maturities of 1 year or more, providing investors with exposure to U.S. government debt. This move by SWP Financial LLC comes amidst a broader trend of increased interest in U.S. Treasury securities, as other institutional investors such as Boss Asset Management LLC and GDS Wealth Management have also raised their stakes in Gov. The ETF's share price has shown stability, with a recent opening at $23.12 and maintaining a consistent moving average over the past 50 and 200 days. This reflects a steady demand for U.S. Treasury bonds, often considered a safe haven asset, especially during times of economic uncertainty or market volatility. Such investments are crucial for risk-averse portfolios, providing a buffer against potential downturns in more volatile asset classes.
SWP Financial LLC has made a significant move by investing $3.25 million in the Vanguard Total International Bond ETF, NASDAQ BNDX, during the second quarter, according to their latest SEC filing. This purchase of 65,604 shares represents 1.8% of SWP Financial's investment portfolio, making it the firm's 18th largest holding. The Vanguard Total International Bond ETF is a fund that focuses on investment-grade, non-USD denominated bonds and is hedged against currency fluctuations, offering a stable income stream with a recent dividend yield of 2.6%. The investment by SWP Financial comes amidst a broader trend of increased interest in the Vanguard Total International Bond ETF, with other firms like Golden State Wealth Management, LLC, and Wealth Enhancement Advisory Services, LLC, also boosting their stakes. This trend indicates a growing confidence among institutional investors in international fixed income markets, potentially driven by the ETF's consistent performance and dividend growth. The ETF's price recently opened at $49.46, hovering close to its 52-week high, suggesting a stable market sentiment and potential for further capital appreciation. This strategic allocation by various investors underscores the attractiveness of diversified currency-hedged bond investments in the current economic climate.
PFG Investments LLC has increased its stake in the Schwab U.S. Dividend Equity ETF, SCHD, by 7.9% during the second quarter, as reported by holdingschannel.com. The institutional investor now holds 172,558 shares valued at approximately $4.57 million. This move is part of a broader trend, with other institutional investors such as Consolidated Portfolio Review Corp. And Midwest Financial Group LLC also significantly boosting their holdings in SCHD during the same period. This ETF, which tracks the Dow Jones U.S. Dividend 100 Index, offers exposure to 100 dividend-paying U.S. equities and has gained attention for its stable performance, indicated by a moderate beta of 0.88, suggesting lower volatility compared to the broader market. The Schwab U.S. Dividend Equity ETF opened at $27.30, maintaining a market capitalization of $71.21 billion and a price-to-earnings ratio of 14.57. The ETF's stock performance has been relatively stable, with a 50-day moving average of $27.33 and a 200-day moving average of $26.77, reflecting its appeal to investors seeking steady income through dividends. The ETF's price range over the past year has been between $23.87 and $29.72, highlighting its resilience amid market fluctuations. This increased institutional interest underscores confidence in SCHD's strategy of leveraging dividend-paying equities to deliver consistent returns, which is particularly appealing in uncertain economic climates.
Deere & Company, NYSE, has seen a modest increase in institutional investment, with PFG Investments LLC raising its stake by 3.3% during the second quarter, as per its latest 13F filing with the SEC. The firm now owns 5,576 shares valued at approximately $2.84 million. This move is part of a broader trend where numerous hedge funds and institutional investors have adjusted their positions in Deere, which is a major player in the industrial products sector, focusing on agriculture, construction, and forestry equipment. Despite the increase in institutional interest, Deere & Company's stock has experienced mixed analyst ratings. While Melius upgraded the stock to a buy, others like Wall Street Zen downgraded it to a sell. The consensus rating remains a moderate buy, with a target price of $518.06, reflecting both optimism and caution among analysts. The company's recent earnings report showed a slight beat in EPS expectations at $4.75. Despite a 9% year-over-year revenue decline, Deere's market capitalization stands at $123.48 billion, with a P/E ratio of 23.88, indicating moderate valuation levels. The company continues to offer dividends, with a yield of 1.4%, which could appeal to income-focused investors.
Cisco Systems Inc., NASDAQ, CSCO, has seen a significant increase in institutional investment, with Marino Stram and Associates LLC boosting its holdings by 5.5% during the second quarter, now owning 10,584 shares valued at $734,000. This increase is part of a broader trend where major institutional investors like Vanguard Group Inc., Invesco Limited, and Goldman Sachs Group Inc. have also increased their stakes, reflecting strong confidence in Cisco's future performance. The company's stock has been performing robustly, supported by positive analyst sentiment and recent earnings that exceeded expectations. Cisco reported a 7.6% year-over-year revenue increase to $14.67 billion and earnings per share of 99 cents, slightly surpassing consensus estimates. Analysts such as those from Bank of America, Deutsche Bank, Gesellschaft, Morgan Stanley, and Evercore ISI have raised their price targets, with a consensus moderate buy rating and an average target price of $74.53. The company's solid financial health is further demonstrated by a return on equity of 27.06% and a net margin of 18.45%. Cisco continues to reward shareholders with a quarterly dividend of 41 cents per share, offering a 2.4% yield and a payout ratio of 62.60%. Highlighting its strong cash flow and commitment to returning capital to investors. Despite some insider selling by executives, which might raise concerns, these sales are minimal relative to their overall holdings. Overall, Cisco's stable financial performance, favorable analyst ratings, and strong institutional backing position it as a resilient and competitive player in the networking and IT sectors. As the company continues to innovate and leverage growth opportunities in the digital landscape, it is well positioned to maintain its competitive edge and deliver sustained shareholder value.
SWP Financial LLC has marginally reduced its position in the Vanguard Small Cap ETF, NYSEARCAVB, by 0.9% in the second quarter, as per its latest SEC filing. The firm now holds 9,972 shares valued at approximately $2.36 million, making it the 25th largest holding in SWP Financial's portfolio. The Vanguard Small Cap ETF, which tracks the CRSP U.S. Small Cap Index, is designed to provide exposure to smaller U.S. companies, encompassing the bottom 2 to 15% of the investable universe by market capitalization. The ETF has seen its price increase slightly, with a current trading price of $254.28 and a market capitalization of $67.90 billion. This adjustment by SWP Financial LLC is part of a broader trend among institutional investors modifying their holdings in the Vanguard Small Cap ETF. Despite the slight reduction by SWP, other firms such as Inlight Wealth Management LLC and Arjuna Capital have recently acquired new positions in the ETF. The ETF's performance, with a P/E ratio of 18.27 and a beta of 1.14, reflects a moderate risk level relative to the market, appealing to investors seeking diversified exposure to small-cap stocks. The fund's steady performance is evident in its 50-day and 200-day moving averages of $249.82 and $234.44 respectively, indicating a stable upward trend over the past year.
TMX Group, the operator of the Toronto Stock Exchange, has announced its acquisition of Verity, a prominent provider of investment research management systems, data, and analytics. This strategic move aims to bolster TMX Datalinx's offerings by integrating Verity's advanced data solutions and proprietary analytics, which include insights into insider activity, buybacks, executive compensation, and institutional holdings. By enhancing its suite of tools across equities, fixed income, and private assets, TMX Group seeks to strengthen its position in the global investment-grade data market, catering to over 5,000 clients worldwide. The acquisition is poised to enhance TMX Datalinx's capabilities in delivering optimized investment workflows and enriched data-driven insights, leveraging Verity's core products, Verity RMS and Verity Data. These platforms are renowned for their research management systems and comprehensive datasets focused on public equity filings. TMX plans to continue advancing these offerings, particularly their AI capabilities, to improve client investment outcomes and operational efficiency. This acquisition underscores TMX Group's commitment to innovation and its strategic focus on expanding its influence in global financial data services, potentially affecting market dynamics by providing more integrated and sophisticated data solutions to top investment firms.